Hi, I'm Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about a data analytics stock whose exceptionally bright future is being temporarily blocked out by COVID-19 headwinds, and which, once these headwinds pass, will soar. The name of the company? Alteryx, ticker AYX. Now, Alteryx provides a low-code, easy-to-use data analytics software to enterprises of all shapes and sizes. The niche they fill is enabling companies who don't have an army of data scientists at their disposal to actually use and glean valuable insights from their data, and in turn compete with those companies that do have armies of data scientists. Alteryx basically provides a data analytics tool which allows regular Joes to play the part of data PhDs. It's pretty cool. This tool will inevitably have exceptional value in the data-driven world of tomorrow, wherein every organization of every size and industry will be forced to use data analytics platforms to compete. Yet, despite this bright future, Alteryx stock has plunged 40% over the past few weeks. That's a pretty steep drop in a stock that has very strong fundamentals. Ultimately, this drop will turn into a golden buying opportunity. Here's why. Okay, so Alteryx stock has been hammered over the past few weeks because of fears related to a sharp rise in long-term bond yields. The basic thinking is that as long-term yields rise, equity valuations will correct lower because stocks and bonds are competing investment vehicles. So as bond yields rise, the required rate of return on stocks rises too. That makes sense. But these inflation fears are grossly overstated and super short-sighted. The reality is that inflation isn't going to be a problem with any staying power anytime soon because of the internet, aka the most deflationary force ever invented. In instantly connecting us to everyone and everything, the internet has given consumers the power of choice. No longer do we have to buy products at the local store at whatever price that store sets. Now, we can go online, search Amazon for the lowest price item, and buy that item. And because your local store competes with Amazon, it now has to lower prices to compete with the lowest prices in the market. By the same token, no longer do we have to pay whatever price the movie theater asks to go watch a brand new film. Now, Disney and other studios are launching movies direct to their streaming platforms, where you can buy and watch that movie with the whole family for the same price as one movie ticket. And because your local theater competes with Disney and these super cheap streaming platforms, it now has to lower movie ticket prices to compete with the ultra cheap prices on the streaming platforms. It really is no coincidence that before the internet, pre-1990, inflation in the US consistently hovered north of 4%. But since 1995, inflation hasn't consistently stayed above 2.5%. Since 2010, it struggled to even break 2%. Now, all that matters for Alteryx stock because, again, this interest rate volatility is the singular reason behind the sharp decline in Alteryx stock. And now that we know that it's overstated, we can start to understand why Alteryx stock is so undervalued today. And that begins by looking at the actual fundamentals underlying the company. So, data-driven decision-making, right? It's the future of the business world. Alteryx provides an end-to-end platform which enables this data-driven decision-making by giving enterprises the analytics and tools necessary to turn raw mountains of messy data into clean, actionable insights. Importantly, and this is the big thing, Alteryx does this in a friendly, low-code, easy to learn and easy to use software environment. That is, you don't need to be a data scientist or have a computer science degree in order to make use of the Alteryx platform. As stated earlier, Alteryx truly enables regular Joes to make advanced data-driven decisions. That's big. And it's big because most companies don't have big data skills. All the data scientists in the world, there aren't that many, but all of them that are in the world, they're going to work for Facebook, Microsoft, Apple, big tech. Outside of big tech, only 6% of large companies and less than 1% of small companies employ even a single data scientist, just one. So as we pivot into a data-driven future, most companies are going to lean into low-code, easy-to-use data science platforms to help them in this transition because they don't have the tools to do it themselves. Now, Alteryx is the best-in-breed provider of these solutions, and to that end, the company is going to sell a lot of enterprise seats to its data science platform over the next several years. Alteryx just hit a rough spot amid COVID-19 because the pandemic basically forced businesses to lean up their budgets as economic activity slowed. But now that we have multiple highly effective COVID-19 vaccines in the pipeline, they're being distributed rapidly, it increasingly appears that normal is right around the corner some point in 2021, 2022. As this normal returns, businesses will re-up their budgets. And the Alteryx growth narrative, which was once super hot, will become super hot again. This company will again fire on all cylinders. So, all in all, the fundamental growth narrative underlying Alteryx remains very promising. Now, the biggest reason I like Alteryx stock here is because it's woefully undervalued. I mean, look, you have a $5.5 billion company here that is trading at around 9 times 2021 sales estimates, which might seem steep, but the rest of this industry, meaning application software stocks in general, are trading at 12x sales estimates. So 9 to 12, that's a big gap. But more importantly, the stock's just super discounted when you consider the long-term earnings potential here. Thanks to the company's attractive positioning in the hyper-growth data analytics market, I see Alteryx growing revenues at a 15% plus pace over the next decade. The company's business model is all software all the time, so it's highly scalable and lends itself to big profit margins in the long run. By 2030, I think it's likely that EBITDA margins pop to around 35%. Now on those assumptions, 15% revenue growth, 35% EBITDA margins at scale, my modeling suggests that Alteryx stock is worth at least $120 today. The current stock price hovers around 80. So that's a lot of upside potential to fair value. And in this market, a lot of high quality stocks are trading well north of fair value. So big picture, there is a long runway here for share price appreciation as the world normalizes and enterprise spending rebounds in 2021 and 2022. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit that notification bell, smash that like button, or follow me on Twitter where I love to engage with my readers, my viewers, my audience, anybody out there that wants to talk about stocks. I'll listen and I'll talk back. Well, that's all we have for this time. Until next time, cheers and happy investing to all.